Hi there, I'm Kim from sunny Arizona.
And I'm Kara from vibrant Atlanta, Georgia. Welcome to our channel, the Kara and Kim Live podcast.
We're both seasoned realtors with a passion for all things real estate. From market trends to insider tips, we're here to guide you through the journey of buying and selling homes.
But that's not all. We'll also take you on a journey getting to know various small business owners.
Whether you're a first-time home buyer, need more space for your growing family, or just curious about the market in Phoenix, Arizona,
or a seasoned investor, or you're looking for insights about the metro Atlanta area, we've got you covered.
Our podcast is designed to be informative, engaging, and a bit fun too.
We love interacting with our listeners, so don't hesitate to reach out with your questions or topics that you'd like us to explore.
Subscribe to our channel and join us on this exciting journey. New episodes will be coming your way regularly, filled with fresh content and expert advice.
So hit that subscribe button, turn on notifications, and let's do a deep dive into the world of real estate together. Welcome to the Kara and Kim podcast.
Hi, Kara. How are you today?
I am doing fantastic, Kim. Thank you so much for asking. How are you doing?
I'm doing great. Thanks.
I am very excited for our next guest interview. His name is Franco Barberis. He speaks English and Spanish. He has a very interesting experience in the mortgage industry, and he drops some gems that are definitely useful for people who are looking to not only get into their first or maybe a second home, but to invest and be able to roll their renovation costs into the home loan.
Great. Okay, let's
Alrighty.
get going.
All right. I am so excited to introduce you guys to Franco Barberis, and he is going to be dropping some big gems about a relatively new loan product for a lot of you. It's going to be a game changer. It is helpful if you are looking at a home that is priced below the value in a particular neighborhood because of needing renovations, deferred maintenance, all of those things. And I know all of us, me included, are looking for opportunities to get into real estate, to expand our portfolios in ways that can set us up for success financially. So if you could just introduce yourself, please.
Sure. Hi, everyone. My name is Franco Barberis. I'm a loan officer with North Point Mortgage. We're part of Fairway Mortgage, which is one of the biggest lenders in the country. Yo también hablo español, por si acaso. We can cover that a little later. But yeah, I'm happy to be here and hopefully give people some good information.
Yes, and I am very grateful that Franco speaks Spanish much better than I do. My Spanish is in re-emerging skill, let's say.
She speaks better than she thinks she does. But
So we are going to do this primarily in English. And at the end, Franco will share some information on how you can contact him. And his contact information is also below in the show notes. So can you share a little bit of information about this particular loan product?
So a lot of people want to know how they can buy a fixer-upper. Obviously, a lot of people want that. Same if you're a mechanic, you get a car that needs some work, you get it for a lower price. And this particular product is called HomeStyle, which there's a couple of these rehab loan programs. One's called FHA 203K. You may have heard of that. Some sellers don't want to sell to people with an FHA loan. They have like this prefabricated opinion that they must have bad credit, which is not the case. But this one is for conventional loans. So the way it works is the very overview is you see a house that needs repairs. Then with a certain amount of work, you can get it to the price point to kind of match the rest of the neighborhood. We want to get you pre-approved for however much you can buy. And then once you see it, you have to get a licensed contractor to give you a bid on what the repairs would be. So we need the most detailed bid possible. It has to be in a certain format. That's a little more detailed. But as long as they're a licensed contractor, then when we order the appraisal, we give that bid to the appraiser. So the appraiser is going to see what the value is now, what the repairs would be if they kind of match, if they make sense, if they're not overcharging the client. And then he'll give us the total value after repairs. And that's what the loan is based on. So that's the nice thing. And we have a couple of options too. So there's one that lets us go over 110% of the value. So it covers more repairs. So yeah, it's a really, really good program. A lot of people are using it now, and it's to be able to buy a fixer-upper, which is a great option because you get a house for lower, and this avoids the client having to go and get a hard money loan, as we mentioned. And you get the regular interest rate, and you just put in the regular down payment, which is if you're a first-time home buyer in a conventional loan, it's only 3%. And if you're not a first-time home buyer, it's 5%, and that's it.
Yeah. I mean, and just having the opportunity to get into a home where you can put some sweat equity and increase the value. And then once you've repaired it, you've got a home that's in line with the homes in the neighborhood, and you have built-in equity right there. Typically on the hard money side, they are looking for 15, sometimes 20, and unfortunately sometimes 30% as a down payment. And that can be difficult for the average person, and heck, even the above average person to come up with. So this is definitely a game changer. I know a lot of you guys have reached out to me about how to get into real estate and how can I do it? I only have this amount of money. This is a program for you. Okay, so what strategies do you guys use with this particular loan to help the homeowner through the repair process?
So most of these loan programs come with what's called a HUD advisor. So this is super helpful because they kind of walk you through every step of the way. That's their expertise. We can know everything about it, but there's somebody from HUD kind of giving you the explanation on what's going to be needed, kind of letting you know if there's any pitfalls to look for. That's kind of their job, is to make sure that everything goes through smoothly. It just depends on the loan type. Some don't need a HUD advisor, but some do. We have some loan officers in our office that I wouldn't call it just do these, but they're experts in this kind of loan. So if I have one, let's say a Spanish-speaking client, and they have questions, anything I don't know, we have a lot of people that we can ask. And as part of just maintaining, we're always on the side of the borrower. So we always recommend doing an inspection. So whatever you do, it's not required for a conventional loan, but we recommend doing an inspection just in case something happens. You had mentioned before, you pulled up the floor on the bathroom.
Yeah, I had a recent project where we were doing a full remodel on the home, but all of the bathrooms, the subflooring was rotted out. And so you can't really see that with your naked eye when you're doing a walkthrough. I always encourage inspections. I still pay for them. It gives me a little bit more visibility into what the potential issues are in the home, and then I can possibly back out and get my earnest money back depending on the time frame, or make an informed decision about asking for a reduced price, some contributions to closing. But the more information you have, absolutely, is the better. So can we talk about reserves with these particular types of loans?
Yes. So on some of these loans, if you're going to do like a duplex or a fourplex, that's allowed. You can also do a second home, investment property. Anything that's past a 1 unit, you're going to need a little bit of reserve, depending on the loan type.
Yeah.
Because they assume the government, people have, after the 2008 thing, people sat down and said, okay, we got to make sure that things don't fall apart in the future. So they have to build in, okay, what if, it's not in the quote and it goes over. So you don't lose that thing and you don't lose the property. They ask for some reserves. So that's usually when it gets into a little bigger, like more units. So we can talk to the client and see what they want to do. And obviously we know ahead of time how much money they have, because we ask them how much you want to spend of your own. We see the bank statements. So if it's one that's going to need reserves and they don't have it, we'll try to say, hey, look, that's not enough money for this deal. Why don't we do like a single? It's just trying to work with what we have. And at the end of the day, the client just want, obviously, the best thing that works for them. Mm-hmm. And if you can't get a duplex right now because you don't have the reserve, that's fine. Just get a house, and then the duplex will be the next one you can do it as an investment property.
Or if you're considering buying and you're not sure what you might qualify for, I always encourage people to reach out to one of my loan partners, because they can, one, help educate you, let you know what you might need, if there are any changes, tweaks to your credit score that need to be made. So can you talk a little bit about credit?
Yes, credit is 620 is usually the minimum for these loans, which is great. the better your credit on any loan, the lower the interest rate. So we try to do a really thorough job of going through your. So for most clients, the way it works is we do a soft pull first. We let the client know, hey, on your soft pull, this is your credit score. And I ask them, do you want to proceed? For us to proceed, we have to do a hard pull. So if they do want to proceed, we do a hard pull. The hard pull shows us if there's any disputed accounts, things like that, anything in collections. We can get into collection conversation in a different episode, but we use and it's not just us, it's available to most lenders. We use a what-if simulator. So we go in and see if we can bring up the score sometimes just a little bit, because it goes in 20-point increments. So on conventional loans, usually, like I mentioned, they're very sensitive on credit scores. So if you're below 680, you might get a ding. It's called a loan level adjustment on the interest rate. So if you have a client that's close to 680, I go in and see, hey, we had one at $363 on just paying one account that much, leaving a $100 balance, got their score above what we needed. So instead of telling the client, oh, just pay off all your accounts and fix your score, we just go in, see the minimum that we need. That gets a score higher, and then that gets us a better interest rate. And even if you save an eighth of a point, a quarter sometimes, if you average it out, if you're going to keep that house for 30 years, it's a huge amount.
Absolutely.
Also keep in mind, too, the rates are higher right now, so we know at some point they're going to refi. So I always try to use that calculation as well. It's like, look, you're probably going to have this house for maybe 2 years before you refi. So I said, you're not going to pay this, for that long.
Right.
So always we keep that in mind. What's the future hold? I ask people, how long do you plan on staying on the house? Things like that. And we work with clients, like I was mentioning before, and I keep saying, as I was mentioning before, because we were taping earlier, but on anything that needs to be paid down. It's better to pay down at the closing table a lot of times than to pay it, wait for that account to post, then the credit score. So if we can, we try to pay off anything that we need to, and a lot of times it's paying off a car at closing just so people can qualify.
Absolutely. Can you talk a little bit about how the 1% in interest rate change will impact, let's say, an average home here in Metro Atlanta?
Sure. So I had done a post, and anyone, you can use on Google, you can pull up rate calculators too, but I had done a post when the rates started coming up. On a $300,000 home, a 1% rate change is going to be approximately $200 difference on your principal and interest. Not on your payment total, because there's multiple factors to the payment. But so if you bought a house, or if you were looking at houses when they were $300,000 and the rates were 3.5, and now, for example, let's use 7.5 because that's closer to the market. So it's 4 points higher. So that's $800 more than you're paying now for the same house. So a lot of times that's the difference between can I buy it and I can't afford $800 more. That's out of my budget. But if you can't afford it, just keep in mind, and everyone always thinks of the interest rate. They don't think of the appreciation of the house over time. So sure, you're paying, let's say right now 7, and it's gone down. I'm quoting a few loans now at 6.9, 7.1. So let's say you're paying 7.1, but the house is appreciating at national at about 4.5. So keep that in mind. There's two numbers. It's not just I'm paying 7.1. Your investment is increasing over time as well.
While you're paying down on the principal.
Correct. And you had mentioned that in this market, it's...
Yep. So Metro Atlanta is a unique place. I love investing here. I love helping people invest and buy here. But because we have so many companies that are headquartered here, our appreciation rate is higher than the national average. And it's a little unique depending on the neighborhood. We have some neighborhoods that are appreciating about 15 to 20% depending, and those tend to be a little bit more on the luxury end. But I had a client who purchased in 2016, and I just did a equity report for them. They purchased at $325 in 2016, and the home is closer to $750 now in value. So they've gotten a huge amount of equity in a way that they ordinarily wouldn't have. It's not in a luxury neighborhood. It's not in a gated community. They don't have a pool. It is a 4-bedroom home. But where else are you going to be able to get those kind of returns unless you have some specialized skill? You've invested in the stock market, Bitcoin, or wherever else. So real estate to me is one of the easiest avenues to build wealth, and to do so without having any special skill or training. So if you are interested in buying a home in the Metro Atlanta area and you would like to have a partner who can walk you through that, whether you're looking at an investment property, a multi-unit, or you're just looking for a second home or a primary residence, feel free to reach out to Franco. If you could share your information.
Sure. You can also on Instagram at Franco_Barberis _mortgage. And my phone number is 470-699-1972. Mi teléfono es 470-699-1972. Y en Instagram, Franco_Barberis_mortgage.
Okay.
Y también Kara lo puede atender. She's a great agent, so it's a good team you're working with.
Yes, we would love to assist you. And all of his information will also be in the show notes. And feel free to comment, like, or share. Thank you guys for joining us.
So I think that was great. I'm glad you got a chance to talk to him. I think it just reiterates the importance of having a professional lender, a professional real estate agent that are all going to help you throughout the transaction. I think the biggest takeaway from that is to be able to see the big picture. Not all consumers think the big picture aspect, right? So like you both were talking about the interest rate or the monthly payments, that's not the whole picture. You have the equity, you have payments that you're making toward your principal. All of that is playing a part when you're comparing apples to apples, or you're comparing home ownership to renting.
Absolutely. And Franco is great. I've been on the phone with him after 9:00 at night, on weekends, Sunday mornings early. I'm not sure when he sleeps. He's also part of a larger team as well. And so they work together on getting these loans to the closing table. So I'm really appreciative for his partnership and just his experience in the industry.
It's amazing. It makes a huge difference to have the right partners in place.
Yes. He's actually helping me with the mortgage. So I've gotten to see how it is on the consumer side. And I'm still pleased.
Wonderful.
All right. Well, I think that is it for this episode. Until next time. But if you are looking to buy, sell, or invest in either the Metro Atlanta area or in Arizona, please feel free to reach out to us. Our contact information is always below, and we are always, always accepting new clients.
Absolutely. See you next time.
Bye.